Welcome traders and creators, and in today's video we're going to talk about why support and resistance trading simply does not work, and if you are a support and resistance trader, why I highly recommend you change your trading strategy. But before we get into the video, I want to make sure you guys are subscribed to the YouTube channel, which can be found up here, and follow us on Instagram so that way you can keep up with daily Forex videos, tips and tricks and content. Alright, back to the video. So I'm going to show you guys a simple example. This can be found on any pair, any time frame, but I'm going to be using GBP JPY, the Great Britain pound versus the Japanese yen today on the 15-minute time frame. I'm going to show you guys why support and resistance trading is not reliable and why it just simply does not work. Now, if you've been trading for even more than a month, you know that GBP JPY is probably one of the best pairs to trade if you are a so-and-so support and resistance trader. But I'm going to show you exactly why all these gurus who show you could make these types of trades are all just BSing you, because these are all in hindsight. But during the real trade, during the real time that it's going on, you have no idea what's going to happen, and really you're just gambling at that point. So I'm going to show you a good trade idea, one that actually works out, and then I'm going to show you a lot of others where there was no way that you possibly could have guessed what the market was going to do. So right here we see that we have the market come down, the market stops, right? We have a floor, a floor, a floor. It breaks the floor, usually a break and retest, and it comes back, retest, and then the market falls. So right here is a golden opportunity for what traders would be looking for, right? Support and resistance for traders. We have a floor, a breakthrough, a retest. You put your sell in right here, stop loss above the high, and then your take profit wherever below these lows. See, that seems so simple and easy to do, but I'm going to show you a couple examples as to why that's not really possible to do when the market is actually moving live. So we can see right here, we have what, like 1, 2, 3, 4. We have a quadruple bottom. This is definitely a trader's dream. So when you see something like this, typically what all the Forex gurus love to do is show you how you could have capitalized on this trade and then had your stop loss at 12 pips and then had your take profit all the way up here in your 7.3 risk to reward ratio. But in actuality, that doesn't happen, because when you look at something like this, you realize that this is the first test. Most traders aren't getting in on the first test because they don't know. Then the second time, maybe traders get in on this double bottom. Sure, they may make 50 pips, but this third time that this trade gets in, right around here, you're going to put your buys in because maybe you missed the second time, or you're getting in on the third or fourth time because that's just how you play. So say you get into this, your stop loss can be anywhere from 15 to all the way to 40. Let's just put it right here. And then obviously your take profit's all the way up here because you're super optimistic of this trade. But what you don't realize is that this is just a floor created by big banks and big players, because they understand that 95% of traders are all retail traders and they all trade the same, which is support and resistance. So while everyone is seeing this strong support or floor, they realize that all the stop losses are right here. And what happens next is you get this weird wick that comes out of nowhere, right? Very unnatural wick that probably takes out every stop loss below here, and then the market takes off, leaving every retail buyer out of the market. So I'm going to show you a couple more examples. So what we have here is when you see something like this, you realize that there's a ceiling, but you have to ask yourself, where is the actual ceiling? Are you going off the wicks or are you going off the bodies? Because if you're looking like something like this, you see that the market broke through and it created a ceiling, but then it broke through lower and created another ceiling, and then a little lower and made another ceiling and another ceiling. So where are you actually going to sell this market? And then the same on the reverse. If you're looking to sell off a support or a floor, where is your support? Are you trading it right here? Because the market breaks through and then it retests it pretty well. But at the same time, you can see it from here. And then where's your stop loss at that point? Because now, if you're selling in this area, is your stop loss above this high, or this high, or this high? And now your risk to reward ratio really needs to be intact with, is it really worth risking 30 pips to make 30 pips? You know, you're going to have to increase your stop loss because you don't know if the market comes up to this level. And so there's way too much guessing when it comes to support and resistance trading because you never really know where the actual ceiling or floor is. You're really just guessing because it could have been this one. Maybe you took your sells off of here and the market spiked up. All right, now you're going to take your sells off of here because this is a really good ceiling, right? And then what happens is people see it come back here and they start placing their sells. And then they go into what? 20 pips of profit. And then out of nowhere, boom, market rises. Like, oh, shoot, that didn't work. So we're going to try this again. All right, this is definitely a really good floor because what we see here is the market bounced, it bounced, it bounced, it bounced. So the next time the market comes in, I'm going to buy it. We get this huge wick, which looks like market exhaustion. Then I'm going to put my take profit all the way up here. My stop loss right below these lows. Look how good. That's almost a 10 to 1 risk reward ratio. What happens after that huge wick? You get a massive bearish engulfing, taking out all retail traders, right? So I hope you guys are really starting to see and understand why support and resistance trading actually just does not work, because it's so easy to say this is a strong floor and we're going to buy off of it. Well, yeah, that may be true, but you have to ask yourself, there are so many different possibilities, so many different subjective views where, you know, you can see so many different ceilings and each one of them can be right. This one can be, this one can be, this can, and then eventually you just get into a trading paralysis state where there's just too much information and you just have no idea what's going on in the markets and you can't effectively trade. So I hope this video helped explain why support and resistance trading actually does not work and why you should trade a different way. I'll see you guys in the next video.